If you're still struggling to become a profitable trader, I have 4 charts you can use right now to understand why you still aren't making money. I've never met a profitable trader who couldn't correctly answer these 4 simple tests with just a single glance. I designed each chart and question to demonstrate the 4 skills every successful trader must have. All successful traders know what real prices look like. They think about the prior odds before they make a trade. They design their trades to put the odds in their favor, and they size their positions to manage their risk while maximizing their returns. These charts will test how well you understand these 4 skills. I've had students come to me after trying to become profitable for years, and when I show them these charts, they have no idea what's going on. I always tell them, these charts test your knowledge of the core skills of trading. Learning anything else before learning this is like building a house without a foundation. Without these core skills, no amount of technical and fundamental analysis, fancy indicators, or hot tips will help you. In the long run, you will get wiped out. The good news is I will show you what those skills are and why they're important. By the end of this video, you'll be able to identify and pass these tests by yourself. Core skill 1, knowing what real prices look like. Take a look at these 2 charts. I've made them line charts to make this test easier. Do you see something off with one of them? I'll tell you, one's fake. It's pure noise. But can you tell which one? Most beginning traders can't, and they won't start making money until they can. Until you learn the difference between real prices and noise, there's no hope of making money. You can't even learn to make money when you can't recognize things that matter. By the end of this video, you'll be able to tell these charts apart in a single glance. Core skill 2, thinking about the prior odds. Here's a stock chart 2 different traders have asked me about. The first trader bought here on February 19th. He ended down 60% on April 20th. He now had to get a 300% return just to break even. The other one only lost 20% because he used a stop loss. But they both made this bad trade because they didn't understand what this chart meant. The reality is, it was almost impossible for the trade to work in the way they wanted. Can you spot why it wasn't going to work? To make this easier, I've added an indicator that should help. Can you see why? Core skill 3, designing your trades. Here's a chart for crude oil to be delivered in June. It's down by 80%. What trade did you want to take here? When this happened, most beginners went short. And by going short, they probably made around 55% on the trade. But professional traders who understood the broader context made a different trade and made more than 700%. Here's a hint. You don't just trade oil, you trade oil to be delivered in a certain month. During this same time period, oil delivered in December was down, but not by nearly as much. Can you use that information to create a better trade? Can you figure out how professional traders were able to make that 700% profit? It wasn't leverage. They didn't try to call the bottom of the market. They had a way to make more money at lower risk by buying oil while the market was going down. Core skill 4, sizing your position. Let's look at one final example. This time it's a cryptocurrency chart and it is way up. But there's a problem. Even if you had called the top and bottom perfectly, you could have still lost money on the trade. There's a way to maximize your returns on this trend trade, and there's a way to trade it so you're guaranteed to lose money even though you called the trend correctly. This is how one trader I know made $60 million trading crypto before losing $58 million in a single day. Do you see the issue? Now, before I tell you the answers, go below this video to the comments section and write down your answers and the thinking behind them. It's important to do this before you learn the answers, because after you learn them, you might not understand why you were thinking the way you were just now. I'll go through the answers as much as possible and let you know how well you did. You should pause the video now. Most trading coaches will tell you that 90% of beginning traders lose 90% of their money in only 90 days. I can give you a few simple practices to help you survive that part, and you can find them on our website, trading-max.com. But here's what most trading coaches don't tell you. Of those that make it past 90 days, just 1 out of every 5 will ever make any money. That means only 2% of the people who try trading ever make money in the long run, and it still takes them 3 years and $30,000 in losses before they do. But there's one thing that every failed trader has in common. Not one of them mastered the core skills that all traders need. Once you have those core skills down, there are dozens of systems you can use to beat the market. But not a single one of them will work if you don't have the core skills to use them correctly. Each of the charts I showed you illustrates one of the core skills beginners don't have. And in this video, I will give you a quick breakdown on how you can get started right now so that you will have a strong, solid foundation for becoming a profitable trader. We also offer our module, Foundations, where we go in depth on each one of these concepts and how they fit with each student's individual trading strategy. And if by the end of this video you'll want to learn more, visit our website, trading-max.com. Core skill 1, knowing what real prices look like, the solution. Let's look at that very first test again. This is the easiest version, but it's a good place to start. Charts are pointless until you know what real prices look like. Because if you don't know what they normally look like, you can't pick out the unusual bits. The main way these two charts differ is by how much they move every day. Here's a subtracted version. Instead of showing the prices, it shows the daily returns. Notice how different they are. But which one is a price chart? It's this one. Let's compare real prices and noise by zooming in on a histogram so you can see how big that difference is. Financial prices have lots of days with small moves and a few days with very big moves. There aren't many days with moves in between the small ones and the big ones. It's mostly either or, and the big move days clump together. The single biggest mistake people make when trying to trade is that they don't start by asking, if I didn't know anything about this specific instrument, what would I expect to happen? If you don't know what prices look like in general, you can't visualize what could happen, and so you can't even be prepared for it. If you don't know what being wrong actually looks like, then you're never going to know when to close out a trade. If you don't know how to separate between being lucky and being right, then you're never going to improve as a trader. Core skill 2, thinking about the prior odds, solution. Remember how I added the average true range to that chart in order to help? That's because the issue with this trade is that they didn't understand what the average true range was telling them, that their stop was going to get hit just because of random noise. The average true range measures how much a stock can be expected to move up or down on a typical day. You can think of this as the normal noise a stock will go through day to day. Unless something new happens, most stocks will move up or down by no more than twice this amount. So, if you trade a stock, you have to be prepared for it to randomly rise or fall by twice its average true range on any given day. That's just the noise of the market. And for this particular stock, that is 40% of this stock's price. But a 40% decline will require a 66% return. So, as a long-term investment, this stock isn't going to work. Each day, you can make or lose 40%. And because losses require extra gains to offset them, for every day you don't make money, you'll need 2 where you do. If you're looking for something with high volatility to day trade, this might be an option. But until it settles down, this isn't something you want to try to hold for the long term. Professionals can see this by glancing at the chart. They know that the company itself can only contribute so much to a stock's performance. They always keep the underlying odds in mind. But most beginners only focus on the individual company and get excited by good news. They don't think about the bigger picture first. And that's why learning to see that bigger picture and then drilling down from there is a core skill. Core skill 3, designing your trades. Solution. When they make a trade, most beginners only buy or sell one instrument. And one of the most important skills you need to learn is how to design your trades to put the odds in your favor. Interestingly, this sometimes means taking a losing trade in order to make more money on a winning one. We call this a spread trade. Conceptually, we're getting rid of lots of risks we don't want and do not care about in order to focus as much of our money as possible on the one thing we do care about. That's why professional traders look at a chart like this one and then immediately think about how it correlates with other instruments. In commodity markets, prices are available for orders of that commodity with different delivery dates. All of the oil prices were down. Crude oil to be delivered in June went down 80%, and crude oil to be delivered in December went down 55%. The spread went down by almost 1,000%. You could have made 700% by shorting June and buying December. The relationship between the instruments matters more than what either of them are doing alone. Professionals trade spreads. You won't hear them talked about in the news. You can't even see the prices for them on most free platforms. But designing your trades is a core skill, and using spreads to do it is the difference between making money and barely breaking even. That's why you'll master this technique in our course. Core skill 4, sizing your position. Solution. Here's that crypto chart again. In this trade, the issue is that they didn't understand that it's possible to lose money on a winning trade. No matter how good the trade, being too aggressive guarantees a huge drawdown. The underlying problem is that you need bigger gains to offset your losses. To break even, a 40% loss requires a 66% return. A 50% loss needs a 100% return. And it gets worse. Because of this, you can lose money even when you make the perfect trade. Every trading system, no matter what, has some maximum percent of your trading capital that you can risk. If you try to trade larger, you're just going to lose money. But more importantly, if you risk that maximum amount, you are guaranteed to have a 99% drawdown at some point. So, you have to be trading way less than this. If you've ever heard of the 2% rule, never risk more than 2% of your trading capital on any one trade, this is where it comes from. Being able to think about how a system will perform over a large number of trades separates professional traders from the amateurs. Professionals only take the risks that will benefit them in the long run, beyond just this one trade. Taking too much risk is the main reason 90% of amateurs lose 90% of their money in their first 90 days. That's why knowing how to take the right amount of risk is a core skill. For this trade, anything more than 60% leverage would have just lost money. But trading with 60% leverage would still guarantee a 96% drawdown. And on the average day, the trade would have been in a 60% retracement. For this particular trade, if you aren't willing to lose more than 20%, you shouldn't be risking more than 15% of your capital. And even then, on the average day, you'd be down 6.5%. Keep in mind, this is all assuming that you called the trade perfectly, something that never happens in the real world. In practice, we'd want to be even more conservative. To drive home the point, Here are the equity curves for trading with 3 different amounts of leverage. This is the amount of money you'd have had in your account on each day if you'd started with just $1. 60% leverage gets the highest possible return, 427 times what you started with. But before that first $181 peak, the trade had a 70% decline that didn't recover for 2 years. It then had 5 different 40% drawdowns in just 18 months. And right after that peak, it fell by 80% in just 6 weeks and bottomed out with a 95% drawdown a year later. Again, this trade is perfect. It sells at the top of the market and achieves the highest possible growth rate. But no one would actually make money trading this way in the real world. The risk is too high and the losses along the way are too painful. That's why we keep our risk low and focus on other ways of increasing our returns. Now that you know the answers to each of the 4 questions, how well did you fare? How was your thinking process about the problem before? And how would you think about similar problems now and in the future? Write down in the comments underneath your original answer if you want me to leave your reply. Most trading coaches will give you a list of rules and a simplified trading process, and they'll stop there. That might work if people actually used it correctly, but I've never met a beginner who did. They'll make money for a few months, and then they end up with bigger losses than ever before. The problem is that they can't use these systems correctly because they don't know why the rules exist. They don't understand what the rules are supposed to do, and that's why beginners have trouble sticking to the rules and they end up paying the price. They may even double their money at first, but then they lose it in the blink of an eye. Well, one of my students, John, not his real name, had doubled his money by trading crypto. Eventually, he reached out to me when he started having more losses than he was expecting. After just 15 minutes of Q&A, I saw that the market state had shifted to a situation he wasn't familiar with. I told him that he was getting emotional, he was trading on tilt, he just needed to take a break, come back, clean, fresh, ready to get comfortable with this new situation. Unfortunately, he kept trading, and he lost everything that same day. But now he's working with me regularly to build up that foundation that he did not have and to get a process that will work for him in any market. I was able to see the problem so quickly, even though I didn't know his specific trading system, because I understood the core principles and was able to see that he didn't. The issue was that John didn't understand how the prior odds had shifted. That's core skill 2, remember? And in the long run, he was always going to be unprofitable using his trading strategy in this type of market. Now that he understands how prior odds work, he knows when he should pass on a trade when that type of trade just isn't going to be profitable in the current market. He's now a successful trader. He's been averaging 1% a week, which adds up to 64% a year. I have helped over 1,200 people turn their trading around and get consistent results. You're trading for a reason. Go alone. The odds are stacked against you. Let's put those odds in your favor. I only have a limited number of slots for my new retail trading seminar. Once those fill up, you'll have to get on a waiting list. Get in touch today and let's put you on the path to becoming a successful, profitable trader. You can reach out on our website, trading-max.com, or you can just leave a comment on this video. Every few days, I follow up on them.